Imagine if you could build wealth simply by owning a handful of stocks and never selling them. Sound too good to be true? What if I told you that some of the wealthiest investors have done exactly that, amassing billions through a strategy of buying and holding elite dividend-paying companies for decades? In this video, I am going to reveal 7 dividend stocks so powerful, so consistently profitable that you could potentially hold them for life and watch your wealth compound. These aren't just dividend payers, they are an exclusive group of companies with long histories of raising their payouts year after year, even during recession and market crashes. One of these stocks has increased its dividend for over 60 consecutive years. So, if you are ready to discover a low-stress investing strategy that could set you up for decades of growing passive income, stay tuned. At the end, I am going to share 2 more bonus stocks that I would like you to research and see if it's a good dividend for your portfolio. Hey there, I am Palani, a technologist turned investor and an early retiree. I share my experiences from 20 plus years of investing in US and India. Let's jump right in. Dividend investing is a powerful way to compound your investments because it provides 3 unique advantages over growth stocks. 1. Dividends keep coming even if stock market is down and your yield increases when stock prices go down. 2. Financially sound companies keep increasing their dividends every year. 3. Dividend reinvestment keeps your investment compounding over time. So it's essential that every portfolio has a good number of dividend stocks for portfolio stability and long-term compounding. At the same time, stay away from stocks or ETFs that pay high dividends like 9%, 10% or above. Any yield above 5% is going to impact stock price appreciation, and companies may not have enough free cash flow for investing in future growth. Now let's jump right in. We are going to put these 7 stocks in 2 different buckets. Bucket 1, high dividend, low growth stocks. Bucket 2 is low dividend, high growth stocks. Let's kick things off with Procter & Gamble. Procter & Gamble doesn't need an introduction. This consumer goods giant has been paying dividend and growing dividends for over 60 years. With yield of 2.5% and payout ratio of 64%, it's a classic dividend aristocrat. So, what is dividend aristocrat? It's a company that increased their dividend payouts for at least 25 consecutive years. P&G is a defensive stock, low growth business, but it's a rock solid, recession proof dividend stock. Second one is Johnson & Johnson, a healthcare powerhouse and a dividend king. Dividend King is a company that has increased its dividend over 50 plus consecutive years. J&J is the highest dividend paying stock in this bucket, and it has a cash flow margin of about 22%. It's kind of a recession proof healthcare stock. Third in our list is IBM. IBM yields around 2.75%. It's not a high growth tech play. I like its reliable cash flow and focus on AI and hybrid cloud. With AI and hybrid cloud opportunities, growth is expected to accelerate in the coming years. Rounding off this bucket 1, JP Morgan Chase. JPM is arguably the strongest bank in US. Dividend yield 2.7% and payout under 30%. JPM is well positioned to weather economic cycles while rewarding shareholders. The stock is unique. It has best of both worlds, high dividend, high growth. Let's start this second bucket with the king of growth plus quality, Microsoft. It yields only 0.9%, but the dividend has grown steadily for over a decade. More importantly, earnings and free cash flow are growing double digits annually. It is a tech dividend powerhouse. Second in this bucket is Broadcom. It's another hidden gem. It's a AI play. Unlike Nvidia, Broadcom focuses on AI infrastructure market, developing custom chips for specific businesses. Yield is very low at 1.2%, but has huge cash flow and high earnings and revenue growth. Plus, it has a history of aggressively growing their dividend year over year. So, growth meets income big time in Broadcom. Lastly, Costco, a low yield dividend stock with high quality growth. Yield is under 1%, but Costco's history of special dividends and solid earnings growth. For investors looking at both income and long-term value, this is quite a compounding machine. Alright, now comes two more bonus stocks, Lowe's, a home improvement stock, and Google. I would like you to review these two stocks and see if it is a good dividend stock to have in your portfolio. So there you have it. Whether you are leaning towards steady cash flow or future growth potential, this list gives you a solid base for building a durable income generating portfolio. Let me know in the comments which bucket fits your style, or better yet, do you own any of these stocks already? If you found this video helpful, smash that like button, subscribe for more investing content, and share this with fellow dividend investors. Thanks for watching, and as always, keep compounding. See you in the next one.